IVM.
Ladies and gents, boys and girls, welcome to another episode of Think Fast, a podcast that basically covers all things tech, startups, business, advertising, plus. Usually I have Varun as my co-host, but ladies and gents, Varun has gone to Thailand to get liposuction done. Please offer him your well wishes by tweeting at him. He's at Varun Duggi on Twitter. And at Varun Duggi on Instagram, if I'm not mistaken. And please ask him if his, liposuction went well. As you all know, he's turning 40 in a couple of months. Poor man is really going through a midlife crisis, almost as bad as Jeff Bezos. But replacing him this week is our producer, Jalasmi, whose hair is better than Varun's. Hi, Jalasmi.
Hello.
Are you going through a midlife crisis like Varun? I suppose not.
No. I'm going through a quarter life crisis. I'm not turning 40 next month.
Do you recommend our listeners tweet at Varun offering him Jai Mata Di and best wishes for his liposuction in Thailand?
Yes, please, everybody, please go tweet to him, write to him. It'll be fun.
Yes. So, Jalasmi, you obviously do all the heavy lifting. Varun and just show up and we read a document and, live happily ever after. But ladies and gents, Jalasmi and I are going to run through the most interesting news-making topics of this week. I want to kick off with holy shit, guys. BJP, I mean, irrespective of where on the spectrum you stand, you cannot contest literally and figuratively how well they've done in the assembly elections in India. The final results and the declarations of which are, yet to be announced while we're recording. They'll obviously be live by the time listeners, you guys, tune into this episode. UP, phenomenal victory for the BJP. Uttarakhand, also hand in hand with the BJP. Goa as well. I think AAP, however, had a full-on tunak tunaktun situation happening in Punjab. No one really thought, they'd be able to galvanize and get as much excitement around them as is possible. Jalasmi, do you follow the elections? I don't know if I mentioned this, but I did this Instagram poll just to see how many people even knew we had elections going on. And either my followers, watch too much Real Housewives like me, but a good 20% of them didn't even know that the assembly elections were happening. But you've been in the know?
I've been knowing. I mean, I've been following the elections, not very closely, but yeah, I do go through Twitter once in a while. I do read the news every morning. And as a lot of us, I was impressed with the BJP because they did it again, and this will help them with the 2024 elections a lot. But at the same time, it's just so there are two things. One is ki aur koi contestant hai hi nahi. There's nobody. I mean, you don't have equal, if not lower than that. But then at the same time, it's not the best choice that people have made. So really can't say anything. But yeah, happy for them. They've done it again.
It was a very politically correct way of expressing your thoughts. But let's not, get too much into politics because we don't want to be cancelled and we don't want to be, stormed at on Twitter. So let's switch gears. This week has been really interesting. We've obviously seen a lot of celebrities invest in startups or launch their own funds. You have Samantha Prabhu and Sara Ali Khan, both of whom who've invested in startups. Samantha Prabhu's a, very popular actress based out of Hyderabad. She's invested in Sustain Cart, which is a marketplace, that runs multi-category brands that generally fall under the sustainable sort of, umbrella. And then you've got Sara Ali Khan, who's invested in the Soul Store, which is super interesting. Have you shopped from the Soul Store, Jalasmi? Are you a fan of the t-shirts?
I've shopped from Soul Store. I'm a fan of their t-shirts. And they've been doing a lot of good collaborations in the recent times. I mean, starting with somebody like a Barkhatan and Ayush, then they went to Ravindra Jadeja, and now they've got Sara Ali Khan on board. I mean, things are going well for them.
Yeah, they in fact raised a pretty significant round, which was led by Elevation Capital last year. And it seems like this round is obviously meant for them to scale their digital presence while, of course, tinkering with offline. That seems to be, the general sort of like play over here. But it's become very commonplace. I think we discussed it in one of the previous episodes. You've got Deepika Padukone, who's put money into like Epigame and the likes. You obviously had Katrina Kaif, who became a crorepati thanks to her, partnership with Nykaa. And now you've got someone as young as like Sara Ali Khan, who's, just a couple of movies in, turn into investor. Do you think this trend's here to stay, Jalasmi, or do you think this is just, anomalies that will come and go? Alia Bhatt also. We forgot about Alia Bhatt.
Yeah, I think it is here to stay because they've been earning good money, and at a young age, what can they do other than investing is a good option. It will help them sustain. Movies chale nahi chale, but this will always work. And I'll tell you the fun thing about Soul Store is we have an offline retail store right close to office. So each time somebody has a wardrobe malfunction in the office, or there's a party and kapde nahi hai, we literally go to Soul Store and just buy something. So it has been a savior a lot of times. So yeah,
Yeah,
good for Soul Store.
yeah, no, good for them, man, and good quality t-shirts from at least what I've heard. So obviously in India you've got one end of your celebrities who are becoming investors in all of these large-ish funded companies. In the US you've got Serena Williams, who has now gone from athlete to venture fund MD manager, etc. She's raised $111 million for her new venture fund, which is going to be called Serena Ventures, as one would expect, and it's largely going to fund early stage startups. As per Williams, her firm's inaugural fund was a massive success to the point that it was oversubscribed. And obviously, Serena Williams isn't new to the world of investing. She's launched her own brands. She's also angel invested in a lot of companies, and her husband, Alex Ohanian, if I got his last name correct, he, I think, was one of the co-founders of Reddit, and he in fact also runs his own fund. So it seems like this power couple dynamics where you've got two people raising a truckload of money and obviously deploying it in really interesting businesses, and I'm assuming learning from each other's learnings. Jalasmi, if you had to launch a company, would you raise money from Serena Ventures?
I think I would because while I was researching for this article also, she said that most of the startup money or all the funding mostly goes to men.
Hmm.
And that's why she started her own venture where she wants to encourage more women to come out and be entrepreneurs. And I mean, obviously, I have a better chance with Serena than with any of the
Yeah.
others because without experience, it's only somebody like her who would be willing
Yeah.
to give me the chance. That's what I feel, and that's what I've seen, observed so far. I could be wrong, but yeah.
Yeah. No, I think the point that you brought up is so great because, there is a severe scarcity of women in VC. There is also a severe scarcity of women who, are able to raise a significant amount of money. So, for example, if you look at Indian unicorns, I think off of the overall mix, there'll hardly be, single digit percentages of brands that are even co-founded by women.
Yeah.
I think the point that you brought up is so interesting, where it's important for there to be representation on both sides, right? Both on the investor side as well as on the founder side, as far as, women in business and women in entrepreneurship is concerned. And here's hoping that, she backs more and more of these kind of businesses.
There's one more little observation that I made. So when I was
Hmm.
going through trying to find articles, because this was a New York Times article and I
Yeah.
had no access. And I was trying to look through news, has somebody else also written on this? And what I saw is that people are sharing how Serena's husband congratulated her because she was able to raise significant capital. But there is hardly any news of the detail of what happened and how much capital she's raised. So I
Yeah.
think this is only goes to show that yes, we do need more women in VC.
Sexism is rampant, especially in the space of startups and venture capital. No, no doubt. And super interesting observation, because apart from the New York Times, even I didn't see this covered by anyone else. And it's a massive deal, right? Like, I
Yeah.
remember when one of these guys, I think LeBron or someone, had decided to become, or Shaquille O'Neal, one of these guys had decided to become investors as well. And all of Twitter was a buzz, right? Like, oh my God, bro, can't wait to raise
Yes.
from Shaq. You didn't see too much of that happening over here, but I think, as what happens with most things that women do, the magic happens behind the scenes, and you really watch and learn once things are done. The IPO market seems to be heating up. Obviously, the past 3-4 months have been brutal as far as all the debut IPOers are concerned. Zomato's had to take a massive beating. Paytm has brutal times for Paytm. Nykaa seems to be the one who's, obviously cruising fairly well. And interestingly enough, and sadly enough, a lot of companies that were planning their IPO ended up, semi-shelving their plans, right, while waiting for markets to settle. But apparently,
Yes.
Sachin Bansal's Navi, which is in the fintech fintech and lending space, they are warming up to an IPO, which is interesting given the amount of shit that's come their way over the past couple of weeks. There have been a couple of cases, vis-a-vis fraud and incorrect sharing of IDs, with respect to Navi. And it's not just them; it's generally fintech at large. One of the big concerns is security and privacy, and of course. Indian food delivery giant Swiggy is eyeing raising about $1 billion, through their IPO in 2023 is what they say they're planning for. They're currently valued at 10.7 billion, which is close to slash more than what Zomato's public market, valuation looks like. So Jalasmi, if I had to ask you, right, like you're obviously disconnected from the world of, IPO, etc. If you were Swiggy, would you, and seeing the kind of bloodbath that Zomato's seen on public markets, would you be, as excited to IPO? What are your thoughts on this piece of news?
I was actually just about to ask this to you that Zomato, being a similar company, has
Hmm.
not been able to fare well in the IPO side. So, is this decision by Swiggy a good one? Because, I mean, they do have differences in terms of initiatives, a little bit in terms of the way they operate, but still, the basic business model is sort of similar. So,
Yeah,
I mean, I really don't know. I was actually looking forward to the LIC IPO, to be very honest. Not
yeah,
just because I have people working there, but it was a good one.
yeah.
But I really don't know if Swiggy will be
Yeah,
able
yeah.
to.
I think what we sort of like have obviously asked each other now is valid. I think Swiggy is doing a lot. They've sort of doubled down on Instamart, which is their quick commerce, quick delivery sort of format. Quick commerce also, by the way, right now is under a lot of pressure and heat because so much money has been raised, and obviously, profitability or margins of that business are, yet to be discovered. Swiggy is also apparently in talks to acquire slash, on the verge of acquiring Dine Out,
Dine
which
out.
will sort of help close the loop, right? So Zomato obviously has dining in, so staying in, and it has dining out, through their restaurant business. So Swiggy is trying to sort of, close the loop with all of these bits and pieces. I don't know, man. I think this one is a tough one. I love the company. I, love the way it's run. They've brought a very, product first lens, but universally, and even in the US, whether you look at DoorDash, you look at Postmates plus Uber Eats, you look at Grubhub, or even in China, if you look at Meituan Dianping, none of these guys are profit generators. They obviously have
Yeah.
crazy scale, and the hope is that one day you will see customers sort of level up their average order values. But I don't know, man. Unless something dramatically improves for Zomato, where Swiggy lands is
Yeah, something to see. I think the good part about Swiggy is that it also includes a lot of smaller businesses that usually don't show up on Zomato. Like
yeah,
if somebody has a home kitchen or, some street food places, I think Swiggy is more open to accepting them, and we have access. Like if I'm sitting in office and I want to order something from a street food store. Plus,
yeah.
money wise, Swiggy is a little less expensive. And
Hmm.
I think they also partnered with alternative meat brands. So there are some things I feel are working for Swiggy, but really can't say.
Yeah, yeah. So, last two stories, and then we'll get into our deep dive this week, which is going to be with the most awesome Gauri Devidayal, which I'll get into in just a bit. Is Tata-owned Titan apparently is looking to acquire both rival Noise to expand their wearables play. Of course, as we know and as we've spoken about multiple times, Boat is also all set for their IPO at some point this year. Noise, which is their, a rival and has obviously made a mark in the consumer electronic space. Titan seems to be warming up to them. I think this is a gangster move, man. But Jalasmi, you use both Boat and Noise. What's the difference? Is there any?
Not much because they are both different things. So I have Noise, which is a Bluetooth earphone thing. I have Boat, which is those wired ones. They both seem to be working well, but all I have noticed that Noise is more durable than Boat, so
Hmm.
far at least. But I think Noise is a great brand, and if Titan wants to acquire or invest, it's a great move.
Yeah, no, absolutely. I think, especially with, wearables is a fairly interesting space. Titans obviously got fast track, and this is a really interesting way to sort of, widen the general horizon of all that Titan has built up and invested in. And final piece of news for this week, ladies and gents, is Myntra has announced its partnership with Zalora. If you're scratching your head thinking, ki bhai Zalora kya hai? It's actually Southeast Asia's leading online fashion destination. It largely caters to markets like Singapore, Malaysia. So if you've got any friends in Singapore, Malaysia, Hong Kong, chances are they've heard of Zalora. And it's a house of brands. It has multiple private labels. This story is obviously interesting because, Myntra has been able to create a lot of clout around its platform thanks to exclusive deals, and exclusive collections of sorts with H&M and obviously many of its own private labels that have come up. So this piece of news I found interesting because, especially in the game of fashion, e-commerce, selection and uniqueness and exclusivity of selection goes a long way. Does Zalora and will Zalora have an impact with the Indian customers who may not have heard of Zalora? Yo, Jalasmi, have you heard of Zalora or no?
No, I haven't.
Yeah, so there you go. I think this is a example, and honestly, the only reason I heard of Zalora was when I was researching on e-com plays in Southeast Asia. Otherwise, it's not like it's like a IKEA or an H&M that has cult sort of like following around it. So I think this is a pretty interesting move from Myntra because you usually see a lot of these large e-com brands, whether it's Nykaa that had obviously done their exclusivity with Charlotte Tilbury or with Huda Beauty. You're seeing Myntra pick up these very like hatke, semi-obscure-ish brands. But let's see if this has a play for them. I'm skeptical. What about you, Jalasmi? Do you think consumers will flock to
Um,
Myntra just because they have Zalora?
Possibly. I think they are trying to cater to more niche audiences. And
Hmm.
if you take little parts of niche audiences, they form a quite significant number.
Some
So
of
plus they're
parts,
expanding
yeah.
in other markets. Other markets will come to know about Myntra. I think it should be good.
Hmm. So I don't know, man. I have like a different take on this. I actually really like what Nykaa is doing right now because Nykaa, like while Myntra is trying to woo your like large international brands, I like that Nykaa is doing a mix of like private label and also picking up a lot of your popular Indian brands that have
Yeah.
created a cult either through Instagram or offline or whatever else, and put some muscle behind them. But whose strategy plays off, we'll only find out as time sort of unfolds. But ladies and gents, I think this sort of covers our Think Fast, the fastest segment of today, where we've sort of given you a roundup of the main headlines that we stumbled upon over the past 7 days that have actually caught our eye. We've also got a pretty fabulous guest joining us today, guys. We've got Gauri Devidayal, who is a CEO and co-founder of the Food Matters Group. And if you're from Bombay, you would have definitely heard of the restaurants that she runs called The Table Farm, Magazine Street Kitchen, and many, many more. They're all cults in Bombay, right? Jalasmi, you're from Bombay. You know how much people are
Yeah.
obsessed with all of her restaurants and her cloud kitchens. So, guys, Gauri is joining us to do a deep dive this week on all things F&B, how the restaurant industry is shaping up, the sort of good and bad guys in all of this, which is your delivery brands and your aggregators, and really, what is the future of all things offline, right, and all things dining out. So she's going to be joining us in the next couple of minutes to talk about all of this. But before that, Jalasmi, ma'am, we have to take a break. We have to take a break.
Yes, we have to take a break.
And while we take a break, guys, don't forget to tweet at Varun and wish him all the best for his liposuction surgery that is happening in Thailand.
You're the people pleaser, right? Oh, yes. Or then desperately seeking the one? Oh, wait, you're the one who doesn't think they're ever good enough. Oh. So much drama. And for what? Is it doing you any good? Listen to me. I'm Chetna, your favorite positive action coach. Yes, I'm the one who has been dropping all those truth bombs on every episode. Oh, no. And it's time you learn to say no to drama. That's also what my podcast is called. And a new episode is out every Monday and Wednesday on the IVM Podcast app, website, as well as all major podcasting platforms.
Okay, ladies and gents, we're back from our break, and today we've got none other than the most awesome Gauri Devidayal, who's the co-founder and CEO of Food Matters Group, which includes brands like The Table Farm, Magazine Street Kitchen, Iktara, Mag Street Bread Company, Misty Delivery, Mag Street Toppings, and most recently Mag Street Cafe. Holy shit, Gauri, what all are you up to? She's also like super multifaceted. Got this fantastic podcast as a part of the IVM family called This Round Is On Me. She's also the managing committee of the National Restaurant Association of India, amongst many, many other accolades. For example, Gauri, I didn't know you featured on Forbes India 120 Leaders of Change and GQ's list of 50 most influential young Indians. Hot damn, girl. Ladies and gents, Gauri's joined us today to give us the A to Z of what's been happening in the restaurant space, because this obviously is a category that's been badgered by 2 years of lockdowns, COVID, regulation changes, and the list is never really unending. So welcome to the show, Gauri. You seem to be very cheery and happy. Business is back to usual, I suppose.
It is. And thank you for having me. And sorry about that little verbal diarrhea that you had to do for my intro. But yeah, it's been a busy few years with a little pause thrown in for good measure. Yeah, but we're back. We're back in business, and I'm super thrilled.
So I want to kick off with, you've obviously got like a bird's eye view on what's happening within restaurants as a space, not just because of your own, businesses, but, you are well connected. You're on the managing committee of NRAI. If you had to reflect on what the past 2 years of COVID have been like for your industry, what are your like hot takes? Apart from the obvious of business being dramatically affected, what have been the major, takeaways of 2 years of COVID?
Well, you said it. It's takeaway, actually. It's literally been about pivoting to deliveries and takeaways, and that's been a big part. And you probably have seen how many new businesses have mushroomed in the sort of delivery format. And these are not just new sort of people coming into the industry, but also existing restaurateurs who've created offshoots of their restaurant business and launched them as delivery brands. So that's been a big part of it, and I don't think it was a temporary thing. I think it was it's here to stay for sure. So that's been a big part of it. Obviously, bars have taken a big hit because they various curfew times and space restrictions and alcohol license changes and things like that. So that's been a tricky one, and I think that's just kind of crippling its way back into action now. I think the biggest hit, as in the hit that the business took, was the fact that we haven't had inbound tourism for 2 years. That's a huge sort of icing on the cake that usually happens during season, and that hasn't happened for the last 2 years. So that's been, and of course the ups and downs. But I think by the time Omicron happened in Jan, people had kind of figured out somewhat how to navigate these ups and downs.
Yeah. So, your business changed a lot, right? If I had to ask you, what was the thing that was holding you back from creating a cloud kitchen exclusively for Swiggy, Zomato, pre-COVID and post-COVID? Obviously, through COVID, the reason for you to launch a cloud kitchen is obvious. But what do you think held back restaurateurs vis-a-vis, testing these two sort of options out as far as customer acquisition is concerned?
So firstly, they're very different operating models, right? So everyone just assumes if you have a restaurant, you can start doing delivery. That's not actually the case. It's a completely different marketing proposition. It's a completely different operation, right? Your menu is different. The whole thought process is around logistics and, packaging, which is obviously not...
food also.
Yeah, exactly. The other sort of honest truth is that a lot of restaurateurs look down on delivery, right? It was seen as the sort of slightly uncool thing to do, if you were in the restaurant business. Of course, that all went out of the window when COVID hit. And I think, people have realized that consumer demands and consumer sort of consumption patterns have changed. And while delivery can never replace dine-in completely, it is here to stay, and it's definitely a bigger chunk of your revenue pie than pre-COVID.
Yeah. So give us your example, right? Like you obviously, I mean, I've been to the table. It's a lovely restaurant, dear listeners. If you're ever in Bombay, you must go. Like, you've got the table, which is very like focused. Would you refer to it as fine dining? Is that how you
Yeah.
describe it? You've got your like mentality at one end of this, fine dining experience and service first, restaurant. How did you change, everything from your team to at some level, even yourself, when it came to dipping your feet into all things delivery related? So, what's the structural change that happens in an organization when you're, grappling with these two like parallel realities?
So, it's first of all, we not only changed from a dine-in, or not changed, but we not only complemented our dine-in business with a delivery format, but we also, one of our businesses was focused on a B2B format, which we, obviously all the Bs were closed. So we moved to a B2C format. That's our bakery. And it's crazy. It actually, we realized that this was what we should have been doing all along. And, we just got smarter about how we use our resources, right? So whether it's space, whether it's talent, of course, a lot of restaurants had shut down. A lot of people were out of work. So you just had to be smarter about how you use what was available to you locally. And we've actually now grown from being sort of 2 restaurants and a delivery brand to now being 2 restaurants and 4 delivery brands. So it's something, and the funny thing is that, so we actually, we opened a new concept 10 days before lockdown. And of course, that all went out of the window, when lockdown hit, and we had expat chefs. They went back. They still aren't able to come back into the country. So of course, we had to, recalibrate halfway through, having invested in the space and rethink the offering from that venue. And the interesting thing is that we created various delivery brands during lockdown, and we actually worked reverse. So we moved those delivery brands into a dine-in format. So and it's worked amazingly so far, touch wood. I think the biggest sort of learning for everyone across the board was just almost throwing out of the window everything, all those sort of pre-COVID notions of F&B, and just being ultra creative in not only what the need of the hour was, but what you could do with what you had at your disposal. So like I said, we shifted gear in terms of who our customer was. In the case of one brand, we moved from, delivery into dine-in, as opposed to just dine-in into delivery. And, you probably know this a lot better than I do, being in the tech space, and the e-commerce space, but we've never been, I think, as an industry, digitally savvy. That sort of education sort of happened at this crazy accelerated pace in the last 2 years. And again, that is something that we, really have to up our game on going forward, in all aspects, whether it's recruitment, whether it's delivery, whether it's, your operating systems, everything just has to be far more efficient and, digitized.
So, you've obviously got a lot of startups who've attempted to solve for F&B in the past. Like there was LimeTray, which, had focused on generating websites for, restaurants. You've got POSIS that obviously, focuses on the POS system established within restaurants. Then, you've got like discovery platforms, whether it's the likes of, Dine Out or at one end to the likes of Magic Pin plus at the other end. If you had to, give us a sense of what is the technology solving landscape that's available to restaurateurs today, and what do you think are the spaces where there genuinely are large problem statements, to be solved for, which can be done through tech, like anything on that?
So look, there's, like you said, there's so many tools out there right now. I mean, just at a very base level, something like, a white label product for you to set up your own delivery, right? So you're not entirely dependent on the aggregators. That was like the basic need, in the last 2 years. There's so many people doing this right now, whether they're doing it well and it's sort of, allows you to compete with the aggregators is a different thing, but it's the first step, right? Everything from even digital marketing tools, because now when you're in delivery, the only presence you have is online, right? You're not in a physical space necessarily, and you have to kind of make your presence felt online, right? So even for us, suddenly we were like, trying to understand performance marketing and, ad spends and all of that, which, we may not have focused on before. I think in terms of tools, like even things like the POS system that you mentioned, they were previously very much focused on restaurants, which have much higher revenues than maybe delivery formats. Now you have sort of lower cost, equally sort of suitable POS systems available. And so it's just becoming, the good thing is it's becoming more competitive and therefore, more value driven on every aspect. Even, operationally, whether you're looking at food costs, apps, or you're looking at bar costing apps, all of that, it's all there in the digital space. There's still, I think the sort of speed at which it came out means that they're not as sort of sophisticated as they will be a year or two down the line, but it's definitely, the tools are there for sure. Even like when it comes to food production, right? Like that's a whole thing which we've not sort of tapped into personally, but I know brands like even, Rebel Foods and things are getting into, where automation of the food production part of it. So that's a huge one. That's something that I think we'll definitely be seeing more of in the year to come.
So, before we get into aggregators, because I have so many questions for you, with respect to like there's Swiggy, Zomato, and now there's, quick commerce, which has become an avenue for a lot of these, I can imagine working really well for, for example, like your Mag Street breads, right? Like your croissants and your breads and all of that. But before we get into that, a question that I had for you is, restaurants, interestingly enough, and I think you have like the best insight into this, you have like this house of brand way of operating, right? So it's not like you've taken the table and you've extended it to 30 different locations, but you've almost found newer formats, and newer branding, newer cuisines, and categories per location that you've launched in. And of course there are, there's you guys, there's obviously the Passcode Hospitality Group, which Rakshay runs, that has Pings and SAS and this, that and the other. Can you just help us understand what's the strategy there? Like, why not take one establishment, scale it up like the way social perhaps is done, and why follow an approach of house of brands, and maybe just help us understand what the landscape and the lay of the land within the offline dining out spaces.
So first of all, I agree that our expansion has not been the conventional kind. It's been more lateral than vertical. I think the fact is that one size doesn't fit all. Okay, so there isn't one strategy for F&B scaling. What might work for obviously a QSR brand, or like you mentioned, like a social, and the restaurants that Raksha has been opening all over the country. It really, it's a multiple factors that drive this, right? It's your investment that you have. It's your appetite for expanding across the country or even internationally, in the case of Zorawar, he's opened internationally as well. In our case, we're still very much a promoter driven business. We felt that Bombay, there was a lot more that we could tap into in Bombay itself before we expanded. I'm not saying it's the right or wrong thing, but that was just the approach we took. And I think that our sort of philosophy has always been a focus on quality, right? So, for example, we launched a pizza brand during lockdown. We're obviously not the first people to do a pizza delivery brand, but we just had a very different approach to it. And, hey, there's room for everyone. I think what we're seeing now, and if you look at, say, for example, Impresario or Riaz's brands, they, a lot of people are taking, sort of, you have a restaurant menu, you don't necessarily say, okay, I'm going to start doing, I have table, I'm going to do table delivery, right? You might say that from the table, we know we do like kick-ass burgers. You might just launch a burger brand out of, as an offshoot of your, so it's literally one component of your existing menu that you develop, slightly, but then you're like, I'm doing just burgers, or, I'm doing whatever, there's so many, there are people who've launched just doing gyozas, right? Like it's literally, that's what they do. So I think even, if you look at Woodside Inn, right, they've got the Woodside Burger Shop, and now they've launched delivery just around Woodside burgers, which they're known for, right? So I think it's really interesting to see how, a lot of it is not necessarily product development. A lot of it is just branding. It's around creating a brand where there are sort of multiple players in that space. Like, say, for example, burgers. There are niche burger brands, right? So And I think those are easier to scale. So, you might feel like, oh, why am I not taking my one restaurant brand to multiple cities? Because perhaps that format doesn't actually work. It's a huge capital intense, scaling operation versus like a delivery brand, which is, far more scalable. So I think people are just getting smarter about how they spend, capital that's obviously depleted possibly during COVID, and just being smarter about investing.
So, related question over there, where obviously restaurants is one space, but if you look at FMCG, beauty, personal care, apparel, etc., there's obviously this term of like D2C, right? And like restaurants are like your OG direct to consumers. I think one question for you over there is, how does one drive discovery? Because obviously your location is quintessential for discovery. I haven't seen too many, and maybe it's my bias, but like I haven't seen too many restaurants really leverage, the Instagrams and Facebooks of the world to drive discovery. So if one of our listeners is opening a restaurant today, and if, the job to be done is just get footfall in, how is that panning out? Are there, certain platforms that work better than others? Anything on that?
So, look, discovery is the toughest thing. And I know we've talked about this in the past as well, that like, how do you actually, what is the right customer acquisition cost? And this is the thing, that we're not tech companies, we're F&B companies. And this is where your aggregators come in, right? Especially in the delivery format. So you really, of course, we've been quite vocal about the fact that we want people to order direct from restaurants, from delivery brands, etc. But it's never been to say, you don't need the aggregators. You absolutely do. And they have a huge part to play in discovery, which, no restaurant can do, just by itself.
By themselves, yeah.
So, I mean, I think that if there's one sort of big factor that helps in discovery, I would say it's that.
Yeah. And, if you had to look at the retail landscape, you've obviously got pockets of spaces, like, for example, in your case, there's a Kolaba in Delhi, there'll be, Lodi Colony or Khan Market, or Cyber Hub, etc., etc. And then you've got your next sort of segment, which is your malls, right? Where, food courts are now being populated by these independently run restaurants, cafes, etc. In retail, where is the, like, what is the opportunity there? Because, like QSR, I still get, like, if I was a Chayos or a Chai Point or one of these guys, it's still easier to find pockets of footfall and walk in, right? But if you're slightly more like experiential or niche, what's the landscape right now for where you even open your third, fourth, fifth, sixth outlet?
It's basically where you can afford the rent, honestly. It's such a big factor to where you'll go. I mean, for example, where, for those who are familiar with Bombay, we're very much a South Bombay centric group of brands, right? And for years, we're in our 11th year of operations, and for years we've been looking at venturing north, Bandra and that sort of area. And it is so contingent on finding the right real estate at the right rent.
Price,
so,
yeah.
You might choose to be, even whether you're in a mall, whether you're in, standalone kind of neighborhood, wherever it is, that's, I think, the biggest factor. And what's interesting is that, you would have thought that during COVID, a lot of real estate dropped in prices. I think it happened for maybe 1 month or 2 months. I know in Delhi, for example, there's Khan Market, which is some of the most expensive real estate in the world. The dip probably happened for like a month, and it's exactly back where it was pre-COVID, right? So deciding where you will be is hugely dependent on where you can afford to be, and also viability, right? Like some of these rents are just not viable for restaurant businesses where there is a limited capacity. You cannot seat more than the capacity that you have, right? Unlike like a retail store, you could have sort of, X number of, there's no sort of limit on how much people spend or how many people can come in the course of a day. In a restaurant, there is, right? So it also depends on your format. If you're like a high energy bar, bars always are going to generate higher revenues than, restaurants. If you're fine dining, if you're casual, whether you serve alcohol or not, all of these factors are going to determine where you need to be and, how much space you need. But rent, and honestly, during COVID, Suchita, rent was basically the make or break of restaurants, right? So if you could strike a deal with your landlord, whether they're a mall owner or whether they're sort of independent individuals or whatever it is, that basically decided whether you would stay alive during COVID or not. It was literally down to rental negotiations. So, when it comes to brick and mortar formats, that's basically what it is. And some of it has changed, some of that sort of negotiation or that structuring of rents has changed post-COVID, but it's definitely not like dropped to a point where you can now pretty much open anywhere. It's not that's not the case.
Yeah. I want to switch gears into, I don't know if this is the right thing to say, but like the bad guys in all of this, which is delivery aggregators, right? Now, who would have thunk? I remember when Swiggy had launched and when, Zomato had sort of not pivoted, but like added delivery. My first thing was, who's going to buy, who's going to eat so much food? It's also expensive. All these bills will add up. And, today you see like the addiction that an average customer has when it comes to these delivery platforms. And I think the other thing that's also happened, as you said, is there are cloud kitchens that have come up specifically for that format, and they're bringing their prices down to the level that it needs to be to make that delivery sustainable for them. What's the math? What is like the math of running a delivery business? Are they sustainable? You've obviously seen the likes of Rebel Foods and now CureFit Foods, which have taken the country by storm and obviously raised a shit ton of capital. But what's the formula there? Who's winning? Who's losing? Especially with Swiggy's IPO coming up and Zomato having IPO, what's happening there?
I'd love to know who's actually making money. And as far as I know, no one's winning big right now. So yes, people are raising investment, but look at Zomato, right? The valuation's fallen from the time they IPO to today. So, and, they haven't made a sort of cent of profit in the 11 years that they existed before the IPO. So I don't know the sort of thought process behind the investment that's happening, whether in an aggregator business or in sort of delivery cloud kitchen formats. And at the sort of course, when you have scale, you can negotiate your commissions, etc., to make it more viable. But then you're also trying to become a value brand where your average bill value is like 200 or 300 rupees. So, unless you're doing those volumes, it just doesn't add up, honestly. So, maybe it's a long game, and that's sort of, but right now, the way I'm seeing it is that a lot of these sort of, it's more like people are trying to acquire and make a family of brands and, just have, and that like some of these may not last, and but you're just trying to sort of, you're expanding on that front and seeing what sticks and what doesn't. When it comes to the aggregators, of course, a lot of people have been talking about it being a data game versus an actual, logistics and commission driven revenue model. Again, yet to see how this is going to actually be monetized and give value back to investors. But from a restaurant's perspective, or from a, as an F&B operator, there's no doubt that they do create value for restaurants. But I think that you, if you're a restaurant brand, it also depends on whether you're a new kid on the block or you are established and you have sort of bargaining power. So there's no one formula that fits for everyone. I think that it's just something that you have to figure out, and you have to be very strong about how you negotiate. And more importantly, you have to have a damn good product, because it doesn't matter, whether you're the cheapest sort of biryani on the block or you've, negotiated a great rate. It's the product at the end of the day that that's going to drive your business. And today the customer has so much choice at their sort of fingertips that you better stand out on something, and it's not going to be it's not going to be the color of your brand.
Yeah. So can you give us examples of like breakout, companies that you've seen come up? Because, when like Zomato and Swiggy do their annual announcements of what did India order, it seems like it's the same shit, right? There's biryani, like idli dosa on one side, there's biryani, there's burger, there's pizza. Yeah. You know what I mean? Like it's like a mix of the same. Who, in your opinion, have been rare like breakout companies in the general, cluster of all of this?
I mean, of course, like you mentioned, you hear about your Rebels and your CureFit, and you're like looking out to, either become the next Rebel or be acquired by a Rebel. So these are the brands that people are hearing about. But I think that, again, for me looking at our business, you can't focus only on the delivery part. The dine-in part is a completely different thought process, and people who are excelling in that, again, dine-in is also, you've got your QSR, you've got your mid-level, you've got your premium. there's too much, there are too many different sort of, streams to sort of categorize everyone under one, umbrella and say that, oh, so and so is doing it. So I think there are people excelling in the delivery format. There are people excelling in the sort of QSR format, of course. We've seen, like you said, Chayo's, Domino's, all of them. And you have brands coming into the country even today. And it's amazing. So at least, in that sense, the sentiment is positive, and people are still bullish on this market. But I don't think that, I think it's yet to be seen as to who really, I mean, you have Box 8, for example, which is doing, packaged meals, and they were heavily dependent on like corporates going back to work, right? So there's so many factors at play here as to, what's going to drive the revenue projections for these businesses. And it's dependent on a lot of factors that aren't actually within the control of businesses. So it's interesting times. I think I'm not sort of jumping to any conclusion about this is it or that's, they've nailed it, because a lot of the companies we, mentioned just now are not profitable. So yes, they're raising big numbers, but they're not yet profitable. So to me, profit is sacred. I'd rather have a slow and steady growth, but be profitable and then scale up. And scale, honestly, isn't easy. So for, in our sort of business where, we're very focused on sort of the premium category, on quality, scale isn't that easy. We're not a QSR format. So, it's something that you have to tread very carefully, and you kind of have to decide which sort of side of that, scale balance you want to be on. And, you have to tread very carefully, because I've seen many F&B sort of businesses fall the minute they have raised and tried to, anyone who's giving you money isn't giving it to you for you to sit on it, right? They're giving it to you, go and blow up. And, certain businesses, when you're blowing it up quickly, it's just not manageable. So you have to be very careful about, choosing to raise and what you're raising for and how you intend to, at what pace you intend to scale up.
Yeah. So last couple of questions here. I think one is, restaurants have been notorious for their like terribly low margins, right? And then you throw like Cloud Kitchen in the mix where, like it's volume is the game, right? You can't be like mediocre. You're either crushing it with numbers or, you might as well just figure another opportunity out for yourself. What is the opportunity for, for entrepreneurs who looked at, F&B as that space that could, be a reflection of things that they were interested in? You had so many like, do-eyed like founders. I remember earlier years of LBV, we had so many entrepreneurs who were so passionate about what they were building, and they wanted to do this, neighborhood bar format and this format and that format. Obviously, COVID's been like, a leveler in a lot of ways. But in your opinion, what's the opportunity left?
I don't want to sort of be a dampener. I think that it's not like it's the end of F&B. People still need to eat like a good breakfast, lunch and dinner. And, and they want good food. In fact, that's one thing that's come out of COVID, is that if people are going to step out, they want to make it good. They've become more sort of discerning in what they eat and where they spend their money, and they want, bang for their buck. So I definitely feel that, people who have a vision about a certain cuisine or a certain format, by all means, there's plenty of room for more. I think one of the biggest challenges for our industry today is talent, and I think it's happening across the industry. I mean, across industries and different sectors, but there's a huge drain on talent that's required for successful operations. And I think, that's going to be an interesting thing to develop. I mean, how you sort of harness talent in-house as opposed to look for it outside is going to be a key thing for, people to focus on. And, but yeah, I mean, I'm still very like bullish about this industry, and, it's still got places to go for sure.
This other fad that came up during COVID, right, where everyone sort of started launching products. So you had bars launching, bitters and like mixers, and you had restaurants launching their, sauces in like bottled formats.
Yeah.
Is that here to stay, or is it Tata bye-bye for now?
No, it's here to stay, but hey, it's like pocket change, right? It's not something that's going to, it's what delivery was to us, like pre-COVID, where, it was like, okay, I'll do it. It's not something I'm focusing on. But yeah, it makes sense, right? So like I said earlier, people are just becoming smarter about using what is available to them and at their disposal. And, if it just means packaging something and retailing it that you're making already, that, you're going to kind of, that you're doing anyway, why not, right? It makes sense. It's like our bakery brand, for example, came out of the fact that we were making those breads anyway in-house. So we were like, why not just, scale this up and make a business out of it. And today that bakery business is what kept us going through COVID, in all honesty. So, I definitely, we're doing the same thing. We have we send out chili oil and garlic oil with our pizzas, and, today they're bottled up and you can buy them, in a retail format as well. So it's a no-brainer, right? Everyone's just trying to squeeze every ounce of what they've got, and be more efficient with in-house resources.
Yeah. So last question for you, which is, how has the consumer changed, or have they at all, or has everyone just reset themselves back to pre-COVID times? Any interesting customer insights? What's going to be the next biryani, man? Are momos having a moment of
biryani? Look, that's one big mystery I can sort of safely say has been solved, is that nothing really has changed in terms of comfort food is comfort food. Okay, you can't change that, and everyone's still going to love their butter chicken and their pizzas and their biryani. So it's not, that's something that I got asked so much during COVID, was like, are you going to be changing your menu? Are people becoming more health conscious? All of that. Zero, zilch. Of course, suddenly more people have discovered their gluten allergies and lactose intolerance, but beyond that, it's pretty much the same. So, I think if anything, like I said, that's changed is that people are just far more discerning that if they are going to bother stepping out, it better be good.
Yeah, worth the money. Speaking of which, what is worth the money, ladies and gents? It's all of Gauri's restaurants and cloud kitchens. The table is literally one of my, it's like the Vaishno Devi for me in Bombay. You know what I mean? Any trip I make, I have to go do peripona to the table and then peace out. But thank you so much for joining us. This has been absolutely awesome. Thanks a lot for doing this for us, man.
Thank you. And see you soon, very soon.
Yes, absolutely. So guys, that was the wonderful Gauri Devidayal, and we have our last segment left, which is our segment of recommendations, where because Varun is getting liposuction in Thailand, I will quickly give you 2 to 3 really cool things that I found on the internet and run you through those. But we'll take a quick break and we will be back after the break for my recommendations.
Don't you think that if everyone around you is getting smart, you better be smarter? Hey there, I'm the traveling professor Siddharth Deshmukh, and I'm back with season 2 of my podcast to make you smarter. Smarter with Sid. What's this season's focus about? Well, it's about 10-minute nuggets that will make you stand out at work. It's time to go from smart to smarter. Tune in every Tuesday and Thursday and become smarter with Sid.
Okay, ladies and gents, we're back and we're going to round off today's segment with my recommendations for the week. I would highly recommend this fantastic article called How Glossier Lost Its Charm. So just do a quick search of Glossier Business of Fashion. Glossier spelled as Glossier. For those of you who are uninitiated, Glossier was this a cult beauty brand based out of the US. They went from $0 to $1.8 billion vis-a-vis their valuation, from $0 to $100 million in a run rate fairly quickly. And there's a time when all of my NRI plus American friends were obsessed with Glossier, right? The past 2 years of COVID have really changed their business, and they seem to have lost some of that, early mojo that they had. If you're in the space of consumer brands, direct to consumer, and all things e-commerce and brand building, if you thoroughly enjoy brand marketing, I would recommend you, kick off with this article in Business of Fashion, which is about how Glossier lost its way. And I think it's a really nicely written, thought-provoking piece on what went right and what went wrong at Glossier. So that's my recommendation for the week. And if you like trashy shows, I highly recommend Love is Blind Season 2. Your brain cells may die, but at least you will laugh as your brain cells die. So those are the 2 recommendations from me. I think that covers today's episode, ladies and gents. So I hope you had fun with Jalasmi, Gauri and me on today's episode. We're going to be back with another episode next week. And Varun, unfortunately, will still be getting liposuction in Thailand. But we're going to have another phenomenal guest for you. And we'll make sure that we give you the deep dive on all things new, interesting, and awesome in the world of startups, tech, business, and more. Until then, toodles my poodles, and see you next week.
Hey everybody, it's been another great week on the IVM Podcast Network. On Think Fast, Varun and Suchita talk about two growing categories, mental health and pets. They give us a rundown on why mental health apps have seen a rise, especially as a result of the lockdown. They also analyze the significant growth in the pets category of consumer goods. We often feel that we don't get paid enough for what we do. Join Chetna on Say No to Drama as she talks about self-worth. On Big Talk About Tiny Humans, Dr. Meghna and Devi Shobha discuss why feminism is a dirty word and why people find this term problematic. Sudisha and Arushi from All Things Policy talk about how the Indian economy pointed towards a 30% decline since 2016 in the number of employed young adults. And on The Longest Constitution, Priya looks at the long history of how laws on property are biased against women and how women have fought back to challenge these laws. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you enjoyed this show or any of our shows for that matter, please do tell a friend. Word of mouth really does help us. And also, please, a rating if you could. That is also extremely helpful to us. And remember, we're also on YouTube. You can check out ivmpodcast.com/YouTube to get a list of the different channels that we operate on YouTube. And finally, we'd like to thank our sponsors this week, SBI Life Insurance, Bank of Baroda, India Water Portal, and Max Life Insurance. Thank you so much for making this possible.
Do you wonder why China does the things that it does? Or want to know how we could improve online privacy? Or perhaps you're thinking about how we can kickstart India's economy. If you'd like to search for the answers to such questions, check out All Things Policy, a daily public policy podcast that covers everything from employment figures to aircraft carriers. Tune in from Monday to Friday for new episodes and fresh takes.